Ladies and gentlemen, welcome back to the Crypto News Podcast. We are absolutely buzzing, coming in hot from Buenos, and DevConnect is going on this week. It's been wild, and hope everyone's having fun and enjoying Buenos Aires. Guys, I'm super pumped for today's episode. I know that I say that a lot. This lad has been on, we use the term perpetual futures a lot. I like to call this a perpetual heater. He's been on an all-time podcast circuit heater, literally bringing the noise, not just Alpha City, but also ruffling feathers. It has been an absolute treat, and it's going to continue on the Crypto News Pod. Today, we have the one and only Santiago Santos on the show today, founder and CEO of Inversion, a crypto-native holding company that acquires and transforms traditional businesses using blockchain tech. He is one of the most active investors in crypto. He's backed over 150 startups, many industry leaders over the past decade. Previously, he was a partner at Parify, an institutional blockchain investor managing over $1 billion. He also held investment roles at SageView, a $2 billion growth equity firm focused on software and tech-enabled businesses, and was at JP Morgan's investment banking financial sponsors group. What a bio. Santiago, you've legit been on one of the biggest years of all time. Let's get right into it. What's it like this last couple of weeks? Are you going on these pods being like, I'm going to ruffle feathers, or are you just dropping alpha and part of that alpha is ruffling a couple feathers?
Well, Matt, thanks for having me on. It's just speaking a silent truth. I mean, I think part of the reason why the blog post really, got success and people, shared it is because a lot of people have been thinking about that. The elephant in the room is, how do we value these networks? And I think after investing for so long in the industry, there's no disagreement about the potential of this technology. Everyone is now saying the same thing. The question is, like, in investing, is it priced in? Am I buying something that I'm actually paying for? And look, of course, as markets come down, bear markets are really good because they sharpen the mind. It really forces you to think critically around, am I holding something? Am I being paid enough to take this amount of risk? And naturally, that fits into the conversation here. Where are we as an industry? Because I started Inversion almost a year ago thinking the regulatory environment is very conducive. It will allow us to do things that we historically haven't been able to do in crypto, meaning really deploy this in companies. But the reality is, everyone that might hear what you just said about Inversion is, hey, man, look, there's so many companies that have done pilots in crypto. And so why is this time any different? And I think at that point, it is very different regulatory environment. Like right now, you can go and talk to a business owner and say, we're going to use stablecoins in your business. It hasn't happened yet for the same reasons that, businesses are just inherently slow to adopt technology. But back to your original question, I think I still have not heard a compelling argument from anyone as to why you should value something like Ethereum at 200 times revenue and Solana at 60, 80 times revenue. Like no one. And interestingly, none of the fund managers are interacting with the post. They're all busy writing their investment letters trying to justify why they're down, 40, 50, 60%, have underperformed Bitcoin, and are just, dancing around the fundamental question, which is objectively, like, why would you put on this amount of risk at this valuation? And no one has a coherent answer to it.
So is the next, we've seen this, I think Hyperliquid sort of started this revenue meta, and it's crazy that we actually even call this a revenue meta because it's really just businesses. Like you create revenue, you're going to be valued. It's pretty darn simple. But Hyperliquid comes out almost a year ago today, I guess a year and a couple of weeks ago today, and they start printing money left, right, and center. And we've seen the exact same thing happen. Is this the new meta moving forward? Is it going to be the pumped up funds? However, that's a bit of a hot take you have as well, which I'd love to get into. But moving forward, is it strictly, unless you are producing revenue or unless you're a business that already creates revenue that can be more efficient with blockchain, you're just sort of going to keep going down to zero?
Hyperliquid is actually interesting. And, my criticism is mostly around, I don't want to make a broad generalization. Like if we look at objectively, like revenue of the blockchain, Hyperliquid actually produced way more revenue over the last 90 days than Ethereum. And just to put it in perspective, I'm looking at Blockworks, database, and they put together total revenue per protocols. Hyperliquid's at the top of the list. It cranked in 262 million in total revenue over the last 90 days. So, I think like if you just look at that and you say, okay, let's extrapolate, and it likely say you take the last 90 days, 262. You run rate that and annualize that. Okay, it's going to do roughly $1 billion of revenue for a protocol that is trading at, 30 to 40 billion, right? Is that like crazy out of the norm? Hyperliquid right now is $10 billion market cap, 37 fully diluted, right? So if we look at it on a fully diluted basis, roughly 40 billion on a billion of revenue, give or take. So that's 40 times revenue, not earnings.
Yeah.
And then you say, okay, what
Yeah.
else can I buy if I'm building a portfolio holistically, not just crypto, could be AI, could be technology in general. The best technology companies, super hyped AI companies with contractor revenue, with actual, unit economics are trading at, 20, maybe 25, 30 times earnings. Sorry, not earnings, revenue.
Revenue. Yeah.
And so that's where it just forces the conversation. Yes, Hyperliquid has done a phenomenal job. Yes, it is cranking out fees. And so unfortunately, the conversation in crypto is let's compare Hyperliquid with the rest of crypto, which is, look, a useful exercise if you're just investing in crypto. But as an investor, you always want to look at, am I getting paid to put this type of exposure? My criticism around that, which is not just a criticism around Hyperliquid, is that revenue is incredibly cyclical, right? Because as much as perpetual products are really interesting financial primitives, we all know what that revenue does in a bear market. Like there's just not enough liquidity, you know, trading pairs and the liquidity just dries up, trading activity dries up. And so that's kind of the mistake that I see a lot of investors doing, which is, oh, Hyperliquid's doing all this revenue. Yeah, but it stress tests that exercise. What are those fees going to be in an environment where there's a bear market and there's no enthusiasm to come into the casino? And so it's a very cyclical revenue stream, which again, if you go back to enterprise software companies that are growing fast and have contracted revenue, it's a real business. That revenue doesn't dry up in a bear market as much as it does. It's not as cyclical as much as crypto revenue and earnings are. And so, I come from that world. At Sageview, we're investing in enterprise software, contracted revenue,
Yeah.
multi-year contracts. So even something like Hyperliquid, that is more reasonably valued than Ethereum at 200, 400 times revenue, or Solana at 60 or 70 times revenue. On a relative basis, Hyperliquid is more attractive, but it's a classic LP letter that you're going to hear in the bear market, which is, hey, we put in a position, we outperformed Ethereum, but we're still down 80%
Yeah.
or
Of course.
60%. And, rule number one in investing is don't lose money. Rule number two is don't forget rule number one.
Yeah. And the wild thing there is, speaking about the bear market, again, will Hyperliquid make the same amount of money? No, not a chance. But will it still outperform every other blockchain? Yes. And comparing it to the other blockchains, which you and I are both in agreement of, isn't the best benchmark. What's Ethereum going to do in an absolute bear market where a lot of the DeFi liquidity and user base is dried up? Like that's where things really get scary. But look, we can have
Ethereum is absolutely cooked in my opinion. Like I haven't owned ETH since 2021, candidly. I rotated most of it to Sol. The reason being, this is where a lot of the crypto investors and even techno investors, like tech investors, really lose sight of things. Like, yes, we're all drunk on techno-optimism. And you get all the headlines you want. JP Morgan last week deployed on Base. Wow. Ethereum is a world supercomputer. Things are working. The institutions are coming. However, the value capture is not there. Why? Because think of it, Ethereum, and I wrote this in my blog post. Ethereum, I like to think of it as a federal government. It should collect the vast majority of taxes. However, it's, in states like, in the US, you have your federal government. And if you live in New York, you pay federal taxes, which is 30%, and then state taxes, which is anywhere from 0 to 8, 10%. And that's how you should think about Ethereum, or that's how Ethereum should be designed, right? It captures most of the fees because it provides a security and that gets rented out to protocols and layer twos. But that relationship is actually the inverse. L2s are capturing most of the tax revenue and Ethereum is collecting only a fraction. And so that's fundamentally, the L1 just doesn't support the scalability that you need. So you have to go to an L2. The L2, whether it's Arbitrum or Optimism or other L2s, are going to capture most of the sequencer revenue, most of the MEV. And so they're not going to share it back to Ethereum L1. So again, when you think about, yes, okay, in a world where more institutions come, more TVL comes, more users come, and it likely gets deployed in the Ethereum broader ecosystem, that fee generation is not going to happen on Ethereum. And so that's a common mistake that I see, which is don't confuse the potential, the optimism with the fundamental story of Ethereum. And so you have folks like Tom Lee and Joe Lubin and all these guys that are phenomenal painting the broader potential of the industry, even someone like Larry Fink. But you have to always go back to fundamentals. And Ethereum is not going to produce more than $1 billion of revenue this year, much certainly less in a bear market. For a $400 billion asset, I still, again, no one has been able to articulate a thesis as to why Ethereum should be worth what it is today. Ethereum is like Cisco back in the early 2000s. It peaked. It took forever to recover at all-time highs. And so I just, and this is not just a specific criticism on Ethereum, by the way. We can go down the list of
It's
other
just
protocols.
it's the easiest target by a country mile. And so it makes
Yeah.
sense too. Yeah.
But Solana's no different. Yeah. Solana's going to crank out anywhere from $1 billion to $2 billion if you're being generous on revenue. And by the way, this is a common mistake, folks. Like a lot of people will tell you staking rewards are should be counting into the total value capture of a network, and it's a misnomer. I would push back again. No one has really made a cohesive argument as to why that should be part of the protocol's revenue. Staking rewards are not and should not be counting. So I'm purely looking at, again, MEV and fees that are captured by the chain, right? Because that's what you're paying for block space.
Yeah.
That's a product that the L1 or the L2 is facilitating. And so again, Solana is valued at 70 to 80 billion. If it produces 1 or 2 billion of fees, that's 40 times revenue, 70 times revenue. That's not a fundamental value buy. Like that to me just does not. I own Solana. I don't know any Ethereum. But when I look at that, and everyone comes in here and says, AI server overhyped. And I don't generally disagree with that. I just fundamentally think markets in general are pretty well valued. And I think that we're in the second half of the cycle than the first half. And so when that's the case, I am more critical about these things because I've owned Solana, I've owned Ethereum, I've owned Hyperliquid, I've owned these assets. But as I think about constantly re-underwriting my thesis, it has become increasingly hard for me. You could have sat there like a year ago seeing all the activity happening on Solana and saying, okay, maybe there is a path towards growing to 4, 5, 6, 7 billion of fees. And if Solana under 100, you start saying, okay, it's actually reasonably valued. Solana's sitting at $135. Again, that's a $76 billion valuation. It's not cheap by any stretch of the imagination. And so again, not a specific criticism on any network, but as you go down the list, I haven't found pretty much any of the major L1s, L2s to be fairly valued, in my opinion.
Yeah. I want to get into the positive, but before that, what I guess the biggest sort of what the F for me is the Ripples and the Cardanos. Like for me, when I look at, the top 10 on CoinMarketCap and I see Ripple in the 4th spot at whatever it is right now, 100 and something billion, like what is, I candidly don't know anyone who uses this. For me, that's like, at least with Ethereum, I get it. I still use Ethereum in some capacity or an L2 or some leg of it almost every single day. But Ripple, when was the last time you used anything Ripple related? Like dead ass.
Oh, I'll tell you. Well, it's no different than Bitcoin. It's a perfect meme. Bitcoin is the perfect meme. So again, it's almost like the classical Silicon Valley meme, which is don't ever show revenue.
Yeah.
Sell the dream, perpetually sell the dream.
Yeah.
And then just meme your way into existence. Now, it's harder to value and rationalize a social phenomenon like a meme. Why is it the gold is worth what it is? It's a $30 trillion asset class. People hoard it. They like it for jewelry purposes. It's not necessarily anything other than a social construct. Over multiple
100%.
centuries have agreed that this is the thing that people flex. They have gold on their watches and they have gold in jewelry and diamonds, right?
If the world ended today, am I going to go to your crib and be like, hey, you have a piece of bread left? Here's a brick of gold. Please give me. No, it's not happening. Like,
exactly. And so actually from that standpoint, looking at Bitcoin, it is a perfect meme. It is ossified into a social construct where more and more people actually believe that this is a digital a digital gold, non-sovereign store of value. And it's in a class of its own. Whether you agree with that or not, I'm not valuing it on a fundamental basis other than what are the flows? What is the supply and demand for this asset in the same way? What is the supply and demand for gold that inherently doesn't have any industrial purposes, right? It's a terrible semiconductor. Moving $1 billion of gold is actually harder than moving $1 billion of Bitcoin. And so from that standpoint, you actually can underwrite hey, look, it's 6% of gold to market cap. More and more institutions are getting behind it. I can make a somewhat of a argument that it could serve the purpose in a portfolio as a hedge. Okay, great. But this is where I think a lot of folks responding to my blog post would say, wait a minute, like, why are you giving gold an exemption here? gold does, I mean, sorry, Bitcoin an exemption because Bitcoin doesn't generate that many fees. Most of the revenue for the Bitcoin network is coming from block rewards, and the same with the staking rewards.
Yeah.
So again,
Yeah.
I'm never going to value it on a fundamental basis. I'm just objectively looking at it on this framework. However, everything else, including Ripple, Cardano, Ethereum, Solana, Hyperliquid, pretends to be a world supercomputer or a financial rails or Nasdaq on the blockchain or internet capital markets, whatever narrative you want to attach to. And so it should be valued like a tech stock, right? Very different than Bitcoin. And so again, look, this is where I've been probably the most wrong. You could have heard me say 2020, 5 years ago, saying, look, the top 10 composition is going to radically change. Like Ripple, EOS, Cardano, all of these protocols that, haven't really shipped much should kind of go down and kind of cease to exist at some point because they haven't really shipped much relative to DeFi, relative to, Maker, Uniswaps, and all this stuff. Again, Ripple and in their defense, they've just sort of stayed in that camp of a pure meme of never showing revenue, never showing traction, and perpetually selling the dream. But I will say this time is no different. Like again, these tokens have a huge drawdown in the bear market as well, right? They might
Yeah.
have continued to stay in the top 10, but they have a severe drawdown. They catch a pretty good bid because, yeah, you maybe not walk around the conference, but if you walk around normal people and you ask them, hey, have you heard about Solana or have you heard about Ripple? Have you heard
They're going
about
to say
Cardano or
Ripple.
have you heard about it, Solana or Hyperliquid? What's the answer to that?
It's Ripple. It's XRP.
Yeah, exactly. So again, that for me is not enough of a reason to put a position in some of these networks. And I've owned historically Ripple, but I don't own it today. I don't own Cardano. As a fundamental investor, traditional investor, I just can't wrap my head around investing behind something like that. But certainly, I'm not going to fight. I'm not going to short it because there's a whole part of the market, not just in crypto, but just generally, that has just become more short-term momentum driven, mimetic driven, and you see it with
Yeah.
the GameStop phenomenon. So I'm not going to fight that. I'm not going to go short that, but I'm not going to put a
Yeah.
position towards that.
Well said. I mean, there's so many different points we can get into. I loved your point about you don't value casino flow like you value recurring software rev. And that's sort of, we'll get into that more when we touch inversion cap. But a nice little segue into inversion cap would be how you believe, and I think most people do, that most value will flow to the businesses that are built on crypto rails. As a segue into that in and of itself, how do you feel about the PayPals, the Stripes? There's rumors of Amazon, Walmart, the largest conglomerate in tech. Any of the Mag 7 could realistically do it. Creating their own blockchains, creating their own stable coins to really capture a lot of that value. FX just seems like such a no-brainer. I used to work in FX for one of the biggest, best firms in all the FX world. The amount of money and just like, there's so many negative words I can use, like anything else in life, Santiago. You take out the middleman, you can capture billions of dollars. And this is what stablecoins are doing to the banks and to the FX guys. But how do you feel about that? About about incredible businesses building their own crypto rails and products?
My view is that a lot of businesses are going to implement this technology because they can save costs or make more money off of their current customers. That's going to happen. Now, whether they decide to deploy in public infrastructure like Ethereum or Solana or build their own chain, I think you'll see a flavor of both. You're already seeing Stripe build Tempo.
Yeah.
It sort of makes sense for them to monetize their user base. It limits their capacity to capture expand from there because it's not credibly neutral. The Visa network is a good analogy here, which is it's a credit card network. It took a Herculean effort to spin up of coordination amongst different banks and payment processor, different banks to kind of get that consortium in the mix. So ultimately, I continue to believe that public infrastructure will prevail, and most businesses will deploy on top of that. Credibly neutral Switzerland model, and that may be in something like Ethereum, might be something in the Inversion chain. But you're still going to see companies try to look Hyperledger, right? You have JP Morgan's Connexes. Interesting though, because JP Morgan has Connexes, but they also have deployed on Base. I think the credibly neutral transparency is important, but you'll see a flavor of both. That doesn't mean that one is that total, in that world. It doesn't mean it derails a thesis, by the way, because interoperability and composability is a thing in crypto. So even if you have you can point to the internet and say, hey, there was private and public. like infrastructure and eventually public infrastructure prevailed. So I don't want to make like perfect analogies here. I don't think there are, but I will say interoperability is there so that you can interact
Yeah.
with both public and private chains, right? And by the way, it's not binary; it's sort of a spectrum. But I think there are reasons why gun in my head, I do think there is a very big market for public, open, permissionless infrastructure. There's certain things that need to get built, like privacy features that I think are there in some capacity, but that's sort of a design space that if you're a builder out there, I would say that's probably where a lot of the innovation needs to happen.
You gave me a perfect segue. Are you also on Mert's team with Zcash and everyone Naval, everyone's shilling Zcash, everyone's shilling Monero? I mean, we have seen a lot of the privacy spookies and scaries pop up over the last couple of weeks and months. I don't think it's going to get any better. I think the world we're in is going to get spookier. I'm Canadian. I look at my country going to absolute shit. Literally, when I was growing up, arguably the best country in the world. I can wholeheartedly say that's not the case anymore. I don't think it's going to get better. Pete, you chirp someone online or make fun of someone in Canada, they come. I mean, it hasn't happened yet, but it very well happened. I think privacy matters. Are you for a new way of privacy? Are you for adopting the old privacy chains like the Moneros and Zcashes?
Oh, well, I've owned Zcash and Monero since the very, very beginning. I've been investing in cryptos since 2012, so I've touched them, I've owned them. I do own Zcash. I was put in a position not big enough, much to my detriment, but it's interesting to observe that. For me, it's more of a trade. I understand I started hearing about Zcash. It sort of percolated and like that was token 2049 Dubai. Everyone's talking about Zcash. And it was like $50 there, $40, $30. So I should have kind of sized it up a bit more. How do you value that? Again, more like Bitcoin. It's sort of the
Yeah,
mimetic component is there. 21 million
yeah,
Zcash. People,
yeah.
people, it's a good point because you hear a lot of the conversation in Zcash and it's only X% of Bitcoin, right? It is a, $10 billion market cap coin. Bitcoin
Yeah,
is
yeah,
trillion X. So a lot of the conversation centers around, yes, privacy is important. Zcash has built interesting privacy tech. Probably like from a cryptography standpoint, the team is stacked. You're not going to look at it on a cash base, fundamental kind of earnings basis. And so a lot of the mental model there is, can it become a fraction of what Bitcoin is? It's like the private Bitcoin. Like
mm,
Litecoin in its day was silver to gold.
yeah,
And it's harder to underwrite that. It's just purely it is a trade. It is a relative valuation. And this goes back to an important topic here, which is most of the valuations in crypto happen to be on a relative basis, which is Bitcoin's at, close to $1.8 trillion asset. Everything else, Ethereum is a fraction of Bitcoin and everything is a fraction of what Ethereum is. And so we are valuing these networks on a relative basis, which can be useful exercise, but it's not enough. I think you need to overlay the fundamental piece if there is one. Zcash, I think they've been smart enough not to talk about the fundamental piece. It's just simply what you just described resonates with people. The world is becoming more intrusive, big brother. It latches onto the narrative of, privacy is a fundamental right. It matches well with the audience that comes to crypto, right? You want to own your own money, you want to be your own bank, you want to have privacy. So not entirely surprised. I mean, obviously in hindsight, it's obvious, but yeah, I think the narrative is strong for something like that. I'm not advocating for you to put a position or not. None of this financial advice. Zcash, I've seen crazy irrational behavior in crypto and non-crypto markets. So is there a version of the world where Zcash, goes to 100 billion market cap? Yes. Like, is there a version where it goes down to 50 million?
yes,
Maybe a bit. Absolutely. And
yeah,
so zooming out a little, that's where I think crypto's really captivated the attention of it is a casino, right? People come in here and roll the dice. And the reasons why crypto's become the industry that it is in large part is because we built this infrastructure that allows anyone to come in a world where there's increasing inequality and disenfranchisement and impatience, and social media really puts in front of your face of like there is just a sense of entitlement combined with desperation to some capacity. And so
yeah.
people are more inclined to gamble. Then crypto just happens to be 24/7, 365 casino. And I don't
Best
disagree with
casino in the
any of that.
world.
That's sort of the
Yeah,
state of the world. Now, my point on the blog post is, and as I was thinking about it, is crypto is on the margin become still interesting for people outside the US to put on exposure. It's like levered NASDAQ play. It's like technology, I'm going to
Yeah.
go levered long on a per
Yeah.
product. However, a lot of the flows are not going to AI because AI is the main character now. It's capturing a lot of the momentum. And so from a flows basis, I would say on the margin, crypto has captured less on this, less of what it historically had. That's not to say it can grow on an absolute basis. But the biggest problem we have is it is just a casino, going back to the main argument and transitioning a little bit into why inversion. It's just a casino, and we only have 40 million active users on chain today. And the problem with it just being a casino is people get liquidated. And so you churn through that user base constantly, and you're relying on people coming paycheck to paycheck to show up and gamble. And the longer you exist in the casino, the likelier it is that you're going to get drunk and liquidated and that you lose your money. The house wins eventually. And so that's the fundamental problem. So we're selling ourselves short as an industry.
Jeez, what a banger. We got to take a quick break for an ad read. Before we do, Santiago, I'm going to throw out a selfish request. Your next blog post, throw out a Substack banger just on mental models. I know you tie in a lot of mental models to your post, but if you could do one just on mental models, like how you value sort of the revenue generating businesses in crypto, how you value the memes, just this has been an absolute masterclass on mental models. And I feel like you don't, a lot of people, myself included, I make rash decisions. I'll do some FOMO, some stupid shit. I feel like you are literally sitting there being like, did this check out in my mental model? If yes, go. If no, no. So we'll do that. Do that for the listeners. Do that for us. Quick shout out. Prime XBT, love the team at Prime XBT, longtime sponsor, longtime friends. They offer a robust trading system for both beginners and professional traders. Doesn't matter if you're a rookie or a vet, you can easily design and customize their layouts and widgets to best fit your trading style. Prime XBT is also running an exclusive promo for listeners of the Crypto News podcast. Use the promo code CryptoNews50. That's CryptoNews50, all in word, to receive 50% of your deposit credited to your trading account. Again, that's CryptoNews50, all in word, to receive 50% of your deposit credited to your trading account. Now back to the show with Santiago. Okay, that was a masterclass. Let's jump into Inversion. Crypto native holding company, different than a traditional sort of crypto fund as I see it. I could be wrong here. You go after businesses that are already good, traditional businesses, low margin companies. You just make those businesses a hell of a lot more efficient, and you tie crypto and blockchain to the back end. Is that the gist of it?
That's very well said. Yeah. Deeply unsexy businesses that have been around for a while and can be made more efficient with technology.
And what are some of the most low hanging sort of fruit areas? What are some themes? What are some trends, businesses you go after? Is there a specific part of that business? I see sort of the payment side. I can see the ledger side of the business, of course, the data, the bookkeeping. Is any other areas that are sort of non-consensus or not non-obvious that you go after, look after?
The strategy as a whole is not consensus. It's just harder, right? Go and buy a business and retrofit it with this technology. So we've invested 100 billion in infrastructure, almost zero to deploy the technology.
Holy crap.
And that's the issue that I see. And look, it needed to happen. You needed to be in this state where I couldn't have sat here 2 years ago and say, we're going to deploy this technology at scale. You didn't have the regulatory approval to do that. And a lot of this tech was not battle tested. Like go back to 2020. It costs you $1,000 in fees to put in a transaction in Ethereum L1 during the NFT craze. And so you can't really see a way to bring, 1 billion users on chain. Today, very different story. Meme coins have been a really good proof point. When Trump launched a meme coin, you had, a massive spike in user onboarding and flows. And you supported that on a Friday night with low liquidity. So I look at that and started thinking, okay, we can actually now deploy this scale in real businesses. So long-hanging fruit, look, we think of the world from first principles and say, every business, to your point, interacts with payments. We call that systemic friction. Payment processing fees, settlement times, really inexpensive because you're interacting with a traditional financial system. And that predates the internet. And so that systemic friction touches every business. How we can replace that and how quickly can we drive value is the more finer exercise. So we've looked at a lot of, businesses where that fee is high, where you have high chargeback rates. Naturally, that leads us into certain sectors. We like payment processing firms. We like payroll loan providing firms. So like businesses that are touching money on a more regular basis as part of their core business is where we have spent most of our energy looking at, potential acquisition targets. So that's one area. The other core kind of theme that we have is a lot of businesses can be revitalized and they can become financial services firms. And most of the
everyone's doing that now. Become a bank too while you're at it. I love it. It's a good theme. It's
Exactly.
hard to do, but if you can do it, very lucrative.
So the analogy I'll make, again, analogies are not perfect, but crypto as a piece of technology has allowed companies to serve their customer financial products and has collapsed the cost to do that because it's borderless finance. It's kind of you spin up a wallet. And so that historically has been a very big void in serving certain customers because they're not as profitable. Banks typically go towards the highest earning parts of the pyramid because, from an LTV standpoint, you're just generating more money. You need to believe that the customer's going to deposit, a couple thousand,
Yeah.
$100,000, $1 million or so to make it profitable for them because you have a lot of back end infrastructure, ongoing reportance, maintenance costs attached to that. So I used to work at JP Morgan. The biggest cost center of JP Morgan and most banks is back office and compliance. Neobanks kind of changed the equation in some way. And so companies like Nubank and Revolut went after a younger millennial crowd, digitally native, like branchless, where they cut most of the cost was, hey, we're not going to have a physical branch. People want to be served digitally in more real time, more friendly. The user interface is more, refreshed than your, 1,000-year-old, like 100-year-old bank that, doesn't do digital banking well, but it's still expensive for them to serve you and operate as a business. So when you look at these business models, there is a lot of still that systemic friction that I talk about. There is a meta now in crypto going around, which is like neobanks, right? So moving money now is faster, better, and cheaper, right? You collapse that payment processing, you collapse FX costs, and the time in transit collapses so you don't have to hedge the FX. You don't have to source the liquidity as much when you're off ramping. So I'll give you an example. Looked at hypothetically, not our strategy to do like public activist strategy, but like Western Union, $4 billion company, probably the most visible from a trust distribution standpoint in terms of remittances. You walk around here, you ask most people that want to send money, they likely know what Western Union is, and that'll be their first choice. It's trading at four times P ratio. Now, that is immediately interesting because as an investor, I'm of the mind that you can buy a terrible asset at a great price and make a phenomenal return. You can buy a great asset at a terrible price and you will lose your money. Again, a lot of these crypto networks may be good businesses, may be good technology, but they're trading at 200 times revenue. There's no margin of safety. Like you're more likely to lose money on something like that. So Western Union is an example, not to go too much into it, but we look at the world as, can we cut costs? So Western Union, most of their costs go to commission payments to the local network that sources the liquidity. So you're in Argentina, Matt. I'm in the US right now. I want to send you $100. I'm going to go to Western Union. Western Union is going to charge me, depending on the corridor, but maybe 2 to 3% fee for that. Maybe some convenience fee, but want it to get there today versus tomorrow or in a couple days. So I'll pay 2 to 3% on that. And then where they're really charging me, and you'll see that, is on the FX because there's time in transit.
They rinse you. Yeah.
And you know this, right? But stablecoins collapse it, right? There's just sort of a settlement time zero. Historically, most of the cost for that business has been, if you, Matt, want to off-ramp into Argentinian peso, they need a source of liquidity from some local shop there. And they have a really good distribution network of these agents. But now, Matt, the difference now versus today, versus before is you, Matt, can now hold a digital dollar on a wallet. And you don't necessarily have to off-ramp, assuming the regulatory, apparatus kind of allows it. And in most places, that is the case. And so now a business like Western Union, what they should be doing is create a wallet, allow their customers that already trust them to not necessarily have to off-ramp, and they have their own stablecoin. Or they work with USDC or USDT. And if they do that, they don't have to pay the commission, which is on the tune of 40 to 60%. You cut a massive amount of the cost structure of that business. And I guarantee you it doesn't trade like 4 times fee ratio if you do that.
It's crazy. That's a business too. That's one that I've been thinking about for a long time. That's one that has such a negative sentiment in a lot of people's minds too, for that exact reason. When people, you're an Argentinian immigrant living in Canada or USA, and you want to send dollars back to your family, they need to then convert those Canadian dollars or American dollars to ARS. Boom, they get rinsed. Where you could probably charge the same 2 to 3%. And Western Union doesn't take that fee like you talked about. All parties are happy. Western Union's profit margins go through the roof.
Yeah.
Like that's a no-brainer.
Yeah. Two quick points on this point. You mentioned sentiment. Look, we're in a world where there's techno-optimism is at an all-time high. And rightfully so. There's just so much innovation happening over the last 5 years that took maybe 15, 20, 30 years to happen in prior generations. And so the market kind of looks at that and says, gosh, we want to have exposure to the fastest growing areas. So that's AI and crypto and, stablecoin issuers. And you're seeing an influx of M&A activity, paying crazy amount of prices for stablecoin providers. What I'm saying is I love the technology, but I'm also that naturally the market tends to then overlook businesses that are deeply unsexy, have been around for a while,
Yeah.
and leaves them for
Yeah.
dead. And Howard Marks is a phenomenal investor, founder of Oaktree, and he talks about the market pendulum. It swings to extremes. So we've seen it in crypto. We see it in the markets, right? Where most of the returns in the S&P are 7 companies that are, the max 7.
Yeah.
I care more about businesses that have been left for dead, overlooked. And if you look at the analysts, they're all talking about Western Union saying this business is going to cease to exist because stablecoins are going to eat their lunch. And there's other like more tech forward companies, remittance operators that are just more, going to eat into their business. But I will say consumer behavior doesn't change, and building trust in consumers takes a really, really long time. And so I'm more interested in buying these type of businesses because they are trading at a really interesting price. And so, I have no interest in buying a business for 30 times revenue. So, so that's like a overarching theme that we have, which is there's just a lot of potential to go out and buy these businesses that have distribution, have trust, have connectivity with the end user. You can replace a lot of the infrastructure on the back end and make that business more efficient. A lot of times we get asked like, why hasn't anyone done this? It seems obvious. It seems like it should have
It's
happened already.
hard. It's
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 hard, right?
freaking hard.
Now, businesses will like our view, or my view is over the next 25 years, every business is going to graduate to stablecoins. And companies like Stripe are going to play a huge part in that. Companies like PayPal will have their own stablecoin. Companies like JP Morgan, major banks are going to do it. BlackRock's doing tokenization piece. It just makes sense. This money layer of the internet capital markets, like all these narratives that you hear people shill, they're going to happen. They're real. I just don't want to wait another 10 years for this to happen. Like the adoption of technology, the deployment of technology historically has taken a long time. Like it took us 20, 25 years for most businesses to start using software. It's going to take us a while for them to start using AI. Business owners, a lot of times when we talk to management teams, they're family owned, they're small, small middle market kind of businesses. It's not their core competency to think about technology. But what I
No,
will say,
no.
there's a lot of interest there. We go talk to, meet with management teams on the regular. Every week, every day, I'm talking to a business owner, and they, different than before, they will say, "Hey, I've heard about stablecoins. I do want to hear about that. How can we integrate that?"
Yeah. Interesting. I love that. One last thing I'll say about Western Union. This has been an absolute treat, by the way. On Western Union, everyone loves a friggin' comeback story. Everyone loves a comeback story. And I think the people would friggin' love to see Western Union that does have a trustable brand. Mind you, the brand it has a bit of disdain. It's a bit of a shit stain in people's minds. People love a good comeback story. I have so many friends who've tried to do what you were doing and it failed miserably. I couldn't imagine. And again, I've spoke with many of, ma and pa shop businesses. Obviously, these aren't ma and pa the level you're going to, but it's tough, A lot of these guys are looking for exits. A lot of them, like you said, they're comfortable with where they are and they're still making money. And the dream of making that much more money, sometimes if it ain't broke, don't fix it. And a lot of these times, it ain't broke. It's just, do they have the willingness to get to that next level and decrease costs and improve margins? So it's very tough. I love the thesis as well. First time I've really heard this again. It's been front of mind, but not actually hearing it. We've been focusing on the infra for a decade now, but we haven't implemented it. Excuse me. It's time to implement it. So another good thesis of the show. One last thing I'd love to touch, and if there's anything else on inversion, please do. You have a great piece on stablecoins as well, or excuse me, on prediction markets as well. You said it'd be great for Google to integrate prediction markets. Rumor is this is happening. I mean, I've seen a bunch of shit where Kalshi and Polymarket on the same day will announce the same partnership. I'm a hockey guy. It happened with the NHL. Oh, official prediction markets. They both said it. What's true? I don't know. What's the TLDR on prediction markets? Is this just a fad? Is this here to stay? Is it going to get even bigger? Are we going to see more players enter the market? Give me the thesis on prediction markets.
Yeah, look, I've been investing in prediction markets since as early as I could, and they started like Augur was one of the first prediction markets to come out. It didn't work. You didn't have stable coins.
Yeah.
Right? Because imagine you, Matt, you make a bet on an NHL game, like Maple Leafs versus, I don't know, Pelicans or whatever, and you win that. Or you're right about the election, but you put ETH on the line and ETH goes down 80%. It just psychologically is the worst because you were right, but you lost money.
Yeah.
You don't see a world where that works. So I had to invest in Augur. I fundamentally have always felt that this wisdom of the crowd idea is very powerful. There's a book quite literally called Wisdom of the Crowds. And this it's very simple. It's if you survey a big population, you will converge on the answer. And And especially when money's on the line, because people care, right? It's not like a poll, election polls, they're wrong all the time because people could just pull stuff out of their ass and not have value on the line. As soon as you put money on the line, you start, markets are arbiters of truth. They surface the truth. And so I was lucky enough to meet Shane early on, invest in the seed round when I was at Parify. I think Parify is now one of the largest owners of Polymarket. Really getting behind the thesis that prediction markets are very real. They're obviously popped off as probably the most visible consumer application. Again, a really interesting company because people don't care what the infrastructure is. People don't care and actually would be surprised that they work on Polygon, which is, again, narrative violation. But it just works, right? And so the end user, if you talk to people that are using Polymarket, they're not using it because it's, deployed on Polygon. They don't care how it works on the back end. They care, like, can they put money on, like, if there's a game going on right now, you, Matt, you and I are talking about it. Can we easily set up and get money in and put value on the line and start? So I've been in countless conversations with people about an election, and politics. I know you should never talk about politics, but like naturally, it's like, hey, go look at the poly market.
Yeah.
And it's such a good, engaging way. Now, where they have come a long way is just the on rampings become easier, and that's categorically for crypto, right? Before it could have taken you days. Now you can do it, in a couple minutes. But they're going to be very real. One of the things that right now it's certainly very much skewed to politics, to sports.
Yeah.
But look at insurance as an example. Matt, imagine if you have a house in by the water, and there's hurricane risk. You can buy flood insurance and catastrophe insurance or catastrophe bonds, but it's likely not priced very efficiently because they're kind of underwriting that on an annual basis.
Yeah.
Not on a real-time basis. So now you can create very discrete markets on outcomes happening on real time. So saying, hey, what's a poly market on a, flood category X happening in Southern Florida? Well, you go in there and you go long or short. If you have a house, you can actually hedge, right? And if it's totally mispriced, you say, I'm going to put $10,000 on the line and have $1 million home. If there's actually a hurricane happening, my payout is going to cover the repairs. And by the way, that risk is inherently mispriced constantly. Health insurance, flood insurance, auto insurance, because it's not in real time.
Yeah.
The underwriting process is slow. It's periodical on some sort of cadence when it could be made in real time. And that's really the opportunity that I see. Certainly sports elections are a big market to continue to support a lot of activity. But I think you're going to be seeing these other type of applications to continuously price risk with markets for everything, not without its challenges, right? You need to have liquidity.
That's the base one.
Like the largest, I was just talking to a team yesterday that was like aggregating like prediction markets. So you can do arbitrage across prediction markets and just find the best market and snipe it and what have you. I think what you're going to start seeing is definitely integrated into, commentary and media. I mean, it is a better version of the media, right? It is a better version of surfacing information and anchoring a conversation around outcomes. Because again, the economists have the best profession, and market analysts have the best job in the world.
Doesn't
And they
matter.
can be right they can be wrong all the time, and the market has a memory of a goldfish.
They're still an expert. At the end of the day, they're the expert.
They're still an expert because they have a PhD or they have a Nobel Prize in economics. However, now prediction markets change the game.
I love it. What an episode. Anything else on inversion before we let you go? Obviously, before we do go, you can plug it and everything, but anything popping off, any news and anything inversion related that you can plug?
Well, I'll leave you with this. I don't come here. I love this technology as much as anyone listening to this podcast. The potential is very much there. We have 40 million active users in crypto today. We are valued as a $3.1 trillion industry, excluding Bitcoin. That's $1.5 trillion. $1.5 trillion industry with 40 million active users. OpenAI, ChatGPT, will likely go public at $1 trillion and has 800 million users.
Jesus.
20 times the user base, a fraction of the valuation. And remember that. Just anchor your mental model around that and say that the biggest problem that we have as an industry is not that the technology doesn't work. It very much works. Very much works. Stablecoins, prediction markets, it will continue to work. And the biggest problem, the opportunity in crypto today is growing that active user base and moving away from pure speculative activity. Again, going back to the cash flow, I want to build the largest chain, and I will, because I'm going to go buy real businesses. I'm going to replace old infrastructure and settle that activity to my chain. And if I do that well, the entire industry benefits, because I will expand and bring a user that has just never existed, right? That is not here and gets onboarded through a casino or the exchange and doesn't get served. The first thing they see when they log in is 10 times perpetual product on Fartcoin. They don't even see that. They see, hey, I'm using a cell service, I'm applying for a loan or some insurance product, and it's actually cheaper. Oh, okay, that's right. I gained that, right? And I'm going to use that over time. And so I actually don't care if Bitcoin's at 20,000 or 100,000 or a million. I ultimately don't even realize that the company that I'm interacting with is using crypto on the back end. So yeah, we're very motivated, because I think it would be a shame if we just sold this technology for one very narrow use case that is pure speculation. And by the way, this industry will be bigger if we do this well. If we do this well, there is a path to becoming greater than a $10 trillion asset class for this use case of payments and moving money cross-border and doing things faster, better, cheaper. Like it will happen. It's just a matter of how long it will take us to do that. But, I think if we do this well at Inversion, we can do that I don't want to wait another 12 years for this to happen. I don't think it can, realistically, because I think we're going to find ourselves in a tough spot in 4 years if we look around and say, hey, we got all the institutions we wanted. We got all the regulators to kind of like this technology, not want to destroy it. There's no one really to blame. And we couldn't really convince more people and businesses to use this technology beyond pure speculative activity. And I think that's a risk that we have as an industry. And so I feel the urgency, because I don't think we can really justify these valuations as they are today if we don't graduate from the current use case and user base.
Love it. What an epic. Plug your Twitter.
Yep.
Plug Inversion, and then we'll wrap it up.
Yeah, definitely. So we are hiring. We're looking for really smart engineers, product people, investors across the board. Inversion_cap on Twitter, inversioncap.com. Our job board is there. And then if you want to look at my shit posts, and on Twitter, it's at Santiago Roel. Happy to engage in the conversation there, but hopefully this is useful. Matt, I really appreciate you having me on.
Guys, one of the all-time bangers on the Crypto News Pod. Huge shout out to Santiago for jumping on, CEO of Inversion. As always, we'll plug all the notes. Literally top 10 epi, just to he's been on a perpetual heater. Go check out all the other stuff he's done as well, and do go follow him on Twitter for a lot of great shit posts and more alpha than shit posts as well. Huge shout out to Santiago and the team for making this happen. If you guys enjoyed this one, I hope you did. Please do subscribe at Renewed These Worlds. My team and I, speaking of the team, love you guys. Thanks so much for everything. And back to listeners, keep on growing those bags. It's going to be tough, but keep on growing them. And as always, keep on staying happy, wealthy, and healthy. Love you guys. We'll see you on the next one. Ciao.